Welcome back to Cryptolytics, giving you a fresh take on crypto analytics. Today, we're going to have a look at the VWAP bands and see, how we can basically use them to help us trade future cycles and, where we are right now and, kind of go from there. So let's just get straight into it, shall we? Okay, so here we are on my cycle chart, which last time I showed it was when it looked like this, but I'm going to just remove the VWAP bands for a sec. So these are the this is the chart that I usually like to start my sort of long-term outlook on, generally speaking. And the last video basically where I said I suspected that we would hang out here for a little bit. So we were in the middle of this candle basically when I did the video, and we've had that push up into the 20-week SMA and 21-week EMA, this band here, essentially, and that's also the 200-day moving average, and the 21 smooth moving average, or RMA, is sitting in there right in the middle of this band as well. So you have four key moving averages that basically acted as resistance here. As I'm sure you all well know, this candle here, this is a weekly candle, was a result of, most likely a result of the news that the SEC has lost the court case against Grayscale because they were not able to convert their Bitcoin trust into an ETF. And now that they've lost that, they can now file for an application to convert it to a ETF. So it's not an ETF, it's just that they can file an ETF. So to me, that's a very big over-exaggeration. And what happens with over-exaggerations, generally they get sold off. So I suspect, and it's already started really, and I've loaded up on a few shorts here. And as I mentioned in the last video, I do have a long open right now. In fact, I had three different long positions open on Bitcoin, but I've now converted two of those to short and one is still open, but I have just closed a third of it, and I'll probably close the rest once I get a signal. But yep, that's basically just using this. I mentioned on the video, I said, yep, we're waiting for a long signal, and I've posted on Twitter. So if you want to know what I'm doing between videos, because my videos are few and far between, just check out my Twitter. You'll find the link in the description below. Basically just using this this trend reversal. This is the strategy that I created using the cumulative volume index. And it opened along here, and that was just quite a small position, 0.31 BTC on this one. Not a big position, to be honest, because I have a much larger position open on a different exchange. But anyway, so that was along there, and then this is the first TP hit. Second TP missed by a hair. I'll probably keep that one open, but anyway, I guess we're not really covering my trades that I've got open today. What I want to cover is the VWAP bands and how they can help you in future cycles work out really, really good places to buy and really, really good places to sell. So what I'm going to do is I'm going to turn off the log growth curves, because we're not really going to consider it for this, and I'll turn off the support and resistance zones as well, which, as you can see, worked really well right here. But support and resistance zones, which just is inefficiencies via wicks. And we're just going to leave on the chart the VWAP bands. Now, by default, these are the SMA VWAP bands. And we have a look at the settings here. We've got it as the 200. So the 200 period, and I've got this to the smooth moving average, or RMA, or rate of change moving average. That's basically what that is. So you can find this indicator just by typing in SMA VWAP bands, essentially. And it is by QRSQ, I believe is the name here. And they published on August in 2022, so that's last year. And yeah, so you can just basically add it to your chart via this. You'll see this on some of my other charts where I've actually colored them. So I've got the green down the bottom, red up the top, and yellow in the middle. But in this case, we're just going to leave it the default sort of black and white colors, or white, I guess it is. It's not black and white, just white. But anyway, so yeah, so we're just going to quickly have a look and see, how we can use this to just better pick entries for positioning in the market, I suppose. I would say this is for, getting in larger amounts of your spot positions, also taking, sort of having a look to see points where it might be good to start taking profit and exiting the market if we're in a bull market, and showing kind of the sort of structure that we see towards the end of the bull market. I'm going to leave the Cryptolytics BB trend trader on the chart, so it shows us the, if we're in a bullish trend, it's green candles. If we're in a bearish trend, red candles. I'm just going to leave that on the chart just because, kind of like that. It's kind of nice for confluence, I suppose, as well. So let's have a quick look at the most recent touch of the 200 period SMA VWAP bands using the rate of change or smooth moving average, and have a look and see, what kind of prices we got and, what happened after from the bottom side. So the bottom side, you very rarely get touches. So obviously in the bull markets and bullish trends, price can get trapped above and just ride above it for long periods of time. But it's just about how to identify that exit. That's kind of the main thing as well, because generally speaking, when you come back to it, that's, if you're in a bullish trend, that's generally sort of when you want to start looking at planning your exits. But during this time where you're above it, well, you can just sit back and enjoy the ride for the most part. But let's just have a look at the bottom side and see, what you did if you did, like, say, a three-prong, this sort of scaling approach where, the first line, maybe you enter some of your spot position that maybe you sold up the top here, or you could go leverage if you want, but this is very long term. This is weekly, so I don't know if you want to be opening a leverage position for weeks and weeks and weeks, because obviously you just be paying funding that whole time. You might be getting paid funding, who knows, especially in this bearish trend. If you're opening a long here, well, then you've got liquidation as a potential. So this is for like large spot holdings for the most part. Again, this is on Bitcoin chart. I'm using the index chart, indexed by TradingView. So yeah, I mean, this is kind of more for your large long-term spot holdings if you've sold, near the top and, all that sort of stuff. So if you were to ladder in, for example, into the bands, and you have, like, say, weighting on your laddered. So the first band, for example, you would add, say, 20% of what you would want to allocate, right? And the second band, maybe you allocate 30%, right? Say out of like 100%. And then 50, you'll have allocated to that bottom band, right? So because we're talking about a fair bit, we're talking about 21% between the top and the bottom band in this case. But you can see we came back to the bottom of the bands, and we nearly every bear market we have, since the bands have been printing down the bottom anyway, every market cycle so far we've come back to the bottom of the bands. So it's definitely something to consider as well, because it gives you some realistic perspective if we're in a bull market where we actually highly likely will come back to, rather than sort of jumping the gun and following this, is the bottom in, is the bottom in, is the bottom in on a lot of these videos you'll see on YouTube and stuff. Well, I mean, these bands will tell you if we're either really close to a bottom or if we are pretty much at the bottom, because you've got just after a bull market, you tend to have a lot of videos where people are like, here's the bottom in, is the bottom in, is the bottom in, and then they're calling for the bottom the whole way down. Well, if you were just waiting and ignoring a lot of that, and you're just waiting for the bottom of the bands, then you would have basically saved yourself all of this. You're just buying dip after dip after dip, and your first buy on the bands would have been at 18,300, which, yes, we went down further than that, but you could see that even that at that level for this entire period, that was still a great buy. And maybe if you missed it, you could buy more here, buy more here, buy more here. This is a great accumulation area, but then you're still just waiting for larger amounts. So even if you if you were DCAing, for example, like once every time it hit here, and you were, say, putting like $500 every time here, right? The next line, you would say put $1,000 in every time it touched there. Well, we were down below it, and then 2,000, for example, here, like just some sort of dynamic DCA where the lower down you go in the bands, like the more you sort of add to your position. Generally speaking, is I think pretty good. So yeah, so that's kind of like how I treat these bands. Is they're just a really solid way to sort of pick market cycle bottoms. And you can see, at least the good thing about it being a band is that you sort of can give yourself a bit more breathing room, and it gives you sort of a bit more to work with. Whereas if you're just like trying to place your orders on like a moving average, well, you've got just one thin line to deal with. So if you've got a band and you've got a bit more breathing room, more likely your orders will get filled and all that sort of stuff. And you can see in the bottom of the band here, it was perfect, the touch at the bottom of the band, the perfect touch right here on November, on the 21st. And then that's when we went up. And now where are we in relation to the bands? Well, the bands are all the way up here. at 45k for Bitcoin. So, you know, I didn't think we'll be getting there anytime soon. You know, there's always a chance, I suppose, in the next year or so, who knows, we might get up there. But I think sort of up here is maybe more reserved for the actual bull market, but we never know what will happen really. But you can see the bands right now, and they'll probably just hover around here anyway, but they actually will line up with here as well. So even if we do sort of get some sort of bleed down to the end of the year, maybe, and then we sort of start pushing up at the start of the year and come back to around here for the sort of halving, and then potentially like sort of bleed down for the halving, and then just like just before the end of the year, and then push up. Who knows what's going to happen really? But yeah, this could be case for the top of this year / next year. I covered this in a video that I made at the start of the year when I think we were like over here. So, you know, we didn't really know what was yet to come, to be honest. But I've left this on the chart just because why not? So you can see like what my expectations were, or not expectations, but you know, just weighing up probabilities really. And yeah, so anyway, that actually coincides with this this area here. So there's this box here anyways, this wick here to this top here, and then I've just got this bottom here, which is just this order block here. But this top marries up perfectly with the top of the bands as well. So let's have a look at the past cycle and see, you know, how we respected the bands really. Let's just have a look. So I'm just gonna get rid of this. So an example of like this absolute parabolic craziness, which we could get again, you know, BlackRock ETF. This kind of looks like gold when the ETF, I'm sure you've seen this chart like 100 times, and I'm not even going to show it. But the gold ETF chart, right? When BlackRock gold ETF came in and it was like gold was here and then it did this. Well, this is exactly what this kind of looks like, right? Bitcoin in 2016, 17. But let's have a look at the bands and like what happened, you know, since they've basically come into existence really, because the bands only started, at least on the index chart, back in 13. And in 2015, we actually didn't even get back to them. So it just kind of shows you how much heavier the sell-off has been more recently, right? So let's have a look at the bands at the top, in this case, and see sort of, you know, if you're aggressively taking profit at the bands and, you know, you're sort of waiting for sort of some sort of breakout. Well, I mean, in this case, you're in a bullish trend because you got buy here. So if you're like aggressively taking profit, to be honest, once you get above the bands, right? So in this case, you got above the bands, but they didn't hold. It came back down to the bottom, but I guess it's not such a big deal, right? It's not such a big deal. So got back into the inside really of the bottom band. So it's not really that big a deal because you're not below them. Sat inside them, held them basically as support, grinding up slowly. If that wasn't your confirmation to get back in, to be honest, especially after this high low, because the market structure, you got high, high, low, high, low. I mean, come on, like, so if you were taking like aggressive profit, I think you'd probably switch your tune to, okay, the bull market's properly in, right? Especially after this, right? Because you'd probably be like a bit burnt because bear market just kind of like wiped a bunch of your capital out because Bitcoin went from being worth 1,300 to, oh my God, $164. Wow, that's insane. But that did happen, right? And that's not going to happen anymore, things like that. But, you know, we did wipe out a fair bit in the last bear market. So the idea is, right, so once you start to break above the bands and close above them, then that's when you stop taking profit like aggressively on the way up, right? If you can, obviously, and I'm not telling you to stop taking profit, like, because it makes sense to take profit, but I wouldn't be so aggressive with the profit taking, especially when you start to enter this parabolic sort of rise where you start above the band. Because when you're above the band, that's incredible momentum, right? That's incredible momentum. It's where you come back into the bands after a very long time of not closing below them, right? So as you can see with this move, you never got to the bottom part of the band after things just started running up like crazy, right? Never got to the bottom, never got to the bottom, never got to the bottom. Even like at this point, you start to stretch away really fast. So from a mean reversion perspective, you're just so far away from that, even the middle part of the band, that it's just like a pullback. It's just getting too much, right? It's so overheated. And so actually we had a buy cycle top there, which was kind of like perfectly called. And so, yeah, then we come back into the bands, right? So once we come into the bands, it actually pushed all the way down to the bottom. So in this case, it actually put a sell on the chart as well. So the CryptoLeaks BB trend trader actually put a sell here anyway. But in that case, you'd start to, okay, either ladder into shorts or close your long or your spot positions laddered up in the bands. So did we get to the top of the bands? Not really. We kind of did, but you sort of use that mid band at the very least to sort of get yourself out. So that's kind of how you do it, right? So if we just haven't even touched it, haven't even closed inside, or like, well, you close inside the bands here, but you haven't even really convincingly closed like at below the bottom of the bands or anything like that, it's a good time to start to sort of get out. Hopefully you took profit at the price cycle top. That's 100%, 150%. Geez, Bitcoin used to make massive moves. All right, I remember this run very well. It was quite a time to be in crypto, to be honest, especially for me, at least around, I think it was June, around here, where I really got in heavy. Before that, you know, I didn't have as much in Bitcoin, but after seeing, like, you know, after buying a whole bunch in 2015 and just like leaving it there and seeing what it became by mid 2017, I was just like, nah, stuff this. I'm just gonna add way more. But I only got an extra, like, yeah, a few 100%, which is still pretty sweet. But those sorts of gains just aren't happening anymore. So now let's sort of where we are now compared to like the last cycle, I suppose, and that would be here. So what happened was, yeah, we came down. We got to the middle, again, the middle band, right? The middle band, that's where you sort of, in this case, you're holding your shorts or you've sold your spot, then you start buying back here. Right? Then you start buying back here. So you saw it first, you bought back on 19th of November. Wow, it's pretty much the same as the last time. How crazy is that? 19th November, 21st November. This is like on the nose. These cycles are just ridiculous, right? We didn't quite push up as high this time, right? But anyway, so we got to the top of the band on the 19th, which is pretty much the same as this cycle, the first time we touched it. No, that was the middle band, wasn't it? Anyway, it's around the same sort of time, right? Around the same sort of time, because in July, it was the lunar collapse, which is when we first touched the top of the band. So in this case, it was November, and then we came properly into the middle band in December. So big buying there. I mean, you could buy big time there, but you actually kind of missed out. But thankfully, you had another chance over here, thanks to the pandemic. So, yep, great time to be buying. Like literally, just it's all bets are off, right? This is like the band to end all bands. This is the band to buy, the buy band, right? And so yeah, that's just kind of like one of these things. It's very rare, and it hasn't happened yet. But maybe if we enter some sort of Great Depression that goes for an extended period of time, then we'll see the opposite effect in the other direction, where we get stuck below the bands. Who knows? Like, we don't know what's going to happen in the future. But for now, we haven't actually seen that at all. We've only seen this like growth trend, so a perpetual growth trend. So we haven't even seen it like what it looks like on the other side. I guess it would probably look something like this. I guess that's if you invert the chart. But anyway, so yeah, so basically once you accumulated down here, and then bang, we're on. So you could probably add more to your position if you're just following the BB indicator here. So you just added more in, which would probably put your average up to here. But at least then you've got more confirmation that the trend's definitely in effect. And then you came to the top of the bands. In this case, it was just like start to take profit here, and then the middle band, and then the top band. And I would say, like, if you're trying to look to enter shorts, this would be great, right? This would be great. If you short from the top of the bands here, or the middle of the band, or even the bottom of the top band down to the bottom here, in this case, let's just go like tip to tip. It's 100%. I mean, that's a great, middle to middle, 177%, bottom to top, 250%. Pretty nuts, huh? Pretty nuts. And then if you're down here again, load up. It's all about loading up. Who cares if there's some pandemic? That's only going to last a couple of years. I mean, we've had it now, so we now know like how it works. Well, obviously it's ongoing, but in terms of the big effects of it, or any sort of black swan, you only really get a couple of weeks to really make the most of that black swan when it comes to the financial side of things, right? And buying assets and stuff like that. So anyway, that was that. And again, like, so if you did sort of try to, if you thought it was still in a range here and you started aggressively taking shorts out of here, well, you would have got wrecked. But in this case, we got to the top of the band. These little wicks here, they are a sign of weakness, right? But a strong push up to the top of the band here, well, that's a sign of strength. And then this is after the halving, right? So we're after the halving, which means that you don't treat the bands as like a spot to short anymore. Or you could take profit if you're in a long from here, if you wish, but we're after the halving, right? So it's not wise to start to take the bands as a spot to start shorting. in this case, it's better to take it as, well, we're starting to reach the gates, the doors are opening up, and we're gonna basically start to blast off essentially. So that's when, you know, all this stuff happens. The price cycle top is your first point to take profit, like a large chunk of your profit or your spot position that you sort of accumulated down the bottom of the bands. Again, wait for convincing close below the bands, and this is the first time here. So whatever you didn't take profit here, probably would take profit here. So take profit inside the bands, and then you could look to like load up a short here. That would be what you would probably normally do, but in this case we had like this, you know, bigger push up. So, and then also this to invalidate using the bands to short from here, because it worked in 2017 but it didn't work here. So if you get these convincing closes above the bands, well then you start to treat them now as bullish, right? So, and you got to buy here anyway. So then you start to load up on your long throughout the bands again. So long spot right here, long here, and then we pushed up. But then we only really held up there for a short period of time, and then we fell back down below. So again, another close inside the band, that's weakness. Also, you know, you look at all other momentum indicators, they were showing the weakness as well. And so then we start to treat the bands as our resistance. So now, you know, we got this middle band here. So that would be where the indicator said to sell in terms of the BB. But we're just looking at the bands. So you start to load into your short here again. So I guess in this case, you know, your average would probably be here, I would say. Maybe you bought in some there, and some there. So maybe your average is in the middle there. Then you're still in profit by a little bit. Hopefully you took a little bit above of profit, to be honest. But anyway, so, and then what happens, you already know, I'm sure you do. But yeah, then we went into that perpetual downwards trend. So yeah, then that's basically where we are now, right? So we went down to the bottom again of the bands, load up there, load up there, load up there, and then the amazing, very rare circumstance buy of 15,000, you know, that's like the absolute bottom of the band. That would have been absolute steal, right? Absolute steal. So where are we now? Where are we now? Basically, we are in no man's land. Well, we're just kind of waiting, I suppose. In this case, you can't really use the bands because the bands are all the way up at 42K and we are nowhere near there. And I don't think it's very probable that we'll get there, at least for the rest of the year, I don't believe. But who knows? We might get a crazy big jump at the end of the year or something like that after October or up to September or something like that. Another thing is, like, I guess a lot of people in finance end up going on holidays in September and August, and it's just, they're statistically bad months. So I'm expecting too crazy right now, but I think what we're getting is that little retest of the main band there, the 21 EMA. So yeah, that's how you can use the SMA VWAP bands. Well, they're not really SMA in this case. I like to use the RMA because it's just really slow. You can use the SMA, which is the default, I guess, but you know, it's a lot more impatient. So it would have, you know, it called the bottom at you know, 19.5, which is fine, but it's not the actual bottom, really, absolute bottom. It's very impatient. It's very biased towards sort of more recent time, whereas the smooth is very, very long term. I guess, yeah, as I said, it's got rate of change. You got these other ones as well, like the volume weighted moving average and the weighted moving average and the VWAP, and yeah, the ALMA as well, which, yeah, there's just different moving averages essentially, but I guess my favorite is just the RMA, or smooth moving average, which I also use to trade as well. So anyway, that's just what I wanted to cover, is, you know, using the RMA VWAP bands or SMMA VWAP bands to help you nail the absolute bottoms of markets, and sort of how to let them help you guide you a little bit throughout the bullish phase, and sort of what you can sort of start to look at. And if the cycles just keep playing out like they do, which I don't know, it seems like these cycles are just insane how they mirror each other, like from one year to the next. Like this estimated bear market duration nailed on the head. This was exactly how long the previous bear market went for. So that's why I had this on the chart. And you can go back to my videos from last year and see this here. And I literally hit the bottom there. It's just like these cycles, they just seem to repeat over and over and over again. It's insane, right? So anyway, that's it for this video. I hope you found this interesting. If you did, then please give the video a like, hit the subscribe button if you want more videos like this, and feel free to check out all my links below. You'll find my Twitter there, where you can go and see all my latest trades and updates. and all my referral codes to exchanges. If you want to support the channel, that would be greatly appreciated. But until the next video, keep safe out there. This is Cryptolytics signing out. Have a good one.